Good afternoon to everyone in the U.S. and all our friends around the world. What we're going to show is TSLA, Tesla Motors. We're going to show how the high frequency algorithm, which is a mathematical script that they use in supercomputer, buys and sells those things in milliseconds, and there isn't no stopping them. They can go to any extreme levels, and then institutional people and hedge funds and everyone, as a retail investor trader comes back online, they too will chase the highs. But you can't buy stocks and we can see where the breakouts were. We can see how the diamonds were. We put the high in today at 173. We came down, we went below that other lower high, and this is all on a 3-minute. But here's where the ultimate high reversal was, right here. So let me show my MMTs. Right here, the diamonds started to descend for the first time. The algorithms that are used had crossed the bid. That's to the sell side of the marketplace. Once that occurred, they kept it in a 2-teeny script, and it was 46 cents per 1/16th value before you consolidated a 2-teeny script. And then we broke down all the way, and that's a 3-minute level. Now, when I show you here on a daily level Tesla, the public is going to look at that %K no matter what. What the algorithms did here is we had a gap up here. We sold off real good. As soon as that algorithm read 145 at the 20-day simple moving average, that algo came in, the nasdaq was shut down, and you got this bigger part of the move in the dog days of August. Now, one of the things that I can say is that when that thing got to 100% overbought, the algorithm changed in the high supercomputing machines. They have cycles called buy scripts and sell scripts, and they can take them up this high, they can take them down just as much as they took them up mathematically. That algorithm can work in a reversal. When you get to 100% overbought, you can't buy stocks at 95% overbought. Nobody does that naturally that knows anything about this business. However, a machine does it automatically. And you have to come to grips with HFT and how the technologies have to be changed by the exchanges themselves. That includes the NYSE, that includes the NASDAQ comp and the Amex, and all of them, is that they have got to tone down the technologies that are used that make this not a fair game to investor traders. And it doesn't. And that's why it's called a ghost exchange. And you can watch the movie. We put it together. So each time we see that when one of these things happen, when they shut down the NASDAQ, those algorithms went ballistic. They did. They just walked the prices right up in milliseconds in purchases and got them to this extreme. Now it's going to be safe to short this on intraday highs. Moving in the dog days, and we got the monthly jobs report out. Now, one of the things that I want to show you is where it got on a weekly. And you can't buy them on a weekly. When this thing was up here on a weekly level, my God, it went to 99.95%, and the algorithm changed courses. That's where in our 60-minute platform, this is the MMT Market Maker platform, look at where the 159 gap started on a 60-minute. That is a pure algorithm going up. Why do I know? I have an order that I covered today, because I did, at, here, executions. I was originally short Tesla at 164.65, right there. I had buy to cover right there before that lower 60-minute candle would have ran me up to 273 on my short. And that was an algorithm that would have been running against my short. And so it's high computing buy and sell cycles is all I can say for now. But because of the algorithm has run its course, so that means that at the next highs when they come up, all of this process and price is out of the name. That algorithm's already reached this point. That means that when the algorithm goes up and they start reading these diamonds in our platform, that means they're going to roll over and we're going to make lower lows. Everything that's done in the buy side electronic bot supercomputer buy and sell cycles called scripts. That's why we do everything mathematically. We had him pegged. He came right up below three-quarter delta right there, 173.78. And once he broke back below the half delta, which was $6.38 ago, so we have a way of tracking the algorithms mathematically, and math doesn't lie. That's why it's very hard for any level of people to come in here and try to make a market and buy and sell and do things, because it is extremely manipulative and you need the right people helping you. You've all know what I'm talking about out here, and you all know your experiences, every last one of you. And the only way that you're going to get on board is when you get signed up at stockmarketfunding.com. And how does the algorithms that are used in the executions of dark pools and many other things that go on the market that the retail trader investor doesn't know? And it's the system that you're in that you should have a fair and balanced tape between buyers and sellers, and you don't. And you have to know how they're going to manipulate them. But you're going to have to know that when these things get to cooking, that the algorithms are going to cross the market and sell the bids down. Today, once again, you can clearly see that the high was 173, and from 173 we sold down to that low of 160 and a quarter. And at the time, the range increased to 12.75. And it happened at a certain time, and once the move gets away from you, if you're in a high frequency algorithmic buy and sell cycles that are used, which you have to understand where they can go in price, is that when does it reverse? When have they ran the course in price? And so we believe that for right now, going into the end of the month and into September, that Tesla does trade back down to 144. Right in here. And down right over here where this gap up happened. And there'll be certain levels on the way down. But you can clearly see on a 60-minute, when Tesla gaps open, and it's not being manipulated with the algorithms, the algorithm will cross and make lower lows. Look at look at this reversal was, let's just say that the top right here and the high of that top was 158 here. And when it got to 158, we traded down to the low here of 142. So let's take a look at this number again. 158.88 to the low reversal where that algorithm came in, and that low was 135. So it does like to trade when it gets overbought, as it is. And not only that, the algorithms come into play. Look they gap the price up. See, it's not a natural where here, just to give you an idea of something, it's not a natural bid and ask. When you're on a 60-minute chart and you gap up that much, bam, and then you run it. But these 60-minute bars right here are all done with algorithms. And if you buy them overbought, no one says that this is going to continue to go, because it would never do that under normal circumstances. And the public needs to come to knowledge of that. Once your knowledge is built around what I'm talking about here, you'll understand how to come in and get involved in making markets. So the higher it goes in the algo, that makes us taking the short entry all the more less risky, because it's played it out for right now. No one says that it can't come back up and test it. I'm saying that when they go up now, they're going to roll over. So that's where we're reducing the risk in the execution.